Let's be honest, most people don't learn about mortgages until they are mid-offer and stressed. So today, we're fixing that. On this episode of the Rock and Realty podcast, I have Shannon McMaster. She is a mortgage agent with Rock Capital Mortgages, and we are going to walk you through the whole process, step by step, from pre-approvals right through to closing. We are going to call out common mistakes, tips, and advice that will save you time and money so you don't lose your dream home. This is an episode you want to hear from beginning to end, and share it with your friends if they're a first-time home buyer or coming back to the market after a long period of time. Let's get into it. Today, we're here with Shannon McMaster. She is a mortgage agent with Rock Capital Mortgage. We are talking everything mortgages. If you're new to mortgages or a first-time home buyer, this is the episode for you because we are taking it right down to the basics. Welcome, Shannon. So happy to have you here.
Thank you. Thanks for having me. I'm so excited to be here.
So tell us a little bit about yourself, Shannon, your background, and what got you into the mortgage industry.
So, my background is actually in social services and nonprofits. I've been in social services for 25 years, but after a very, very long time, I thought that I needed a change and I wanted to do something completely different. I love working for nonprofits, but I just feel like at this point in my life, I wanted to do something that's for me and that's exciting. So that's sort of how I ended up getting into the mortgage industry. What really gave me the idea to do this was because I actually had difficulties with a previous mortgage that I had. Back when the mortgage rates skyrocketed, I was in a variable mortgage. And I'll admit, I didn't really know much about mortgages. I just knew a sign here. Nobody really explained it to me. So I was in a variable mortgage and it was lovely in the beginning, but then the rates went up very, very high. And then one day we just got a bill for like $10,000 and our payments automatically doubled. So yeah, I'm like, this doesn't sound right. And so we called the bank and they're like, yeah, you reached that threshold. Now you're in negative amortization and you owe us money and your payments are essentially now doubled. So I just thought, oh my gosh, how does that even happen? How does nobody even warn you about that? So it always just never sat right with me. So then when I decided I was interested in looking into a new career, I'm like, you know what? I think I want to look into this mortgage agent thing because I don't want to see that happen to anybody else. So that's how I got into this industry.
Wow. And the reality is it's happened to
So many
many,
people, so many
so
people.
many people with the variable rate. It happened to me.
Mhm.
So it's interesting how your new career came out of your own personal pain going through this experience. So if you're looking to make your next move, whether it's to Orangeville, Dufferin County, or the surrounding area, people just like you reach out to me every single week to help them with their next move. And I would love to have a private conversation with you to see how I can help you make the right decisions, avoid costly mistakes, and properly guide you through the process. Click on the link in the description below to set up a time. Now let's get into this episode. Is it everything that you thought it would be? Like when you became a mortgage agent, have you learned all the things that you thought, yes, this is exactly where I want to be?
Yes, it was really reaffirming. One deal that I got, um, this couple just randomly reached out to me on Facebook and they needed help. And just after having so much communication with them and getting to know them really well, I realized that, I don't know, it sounds kind of crazy, but I believe in the universe and I believe that these people were sent to me for a reason. And I think over years and years and years, I was the only person who took the time to actually help them get out of a really terrible situation. So I just feel that's so affirming to me when I get clients who really, really need help. I can help them, and that's what I do. That's what I did in social services. That's all I want to do is just really help people and really help them make big changes in their lives. So, yeah, I just feel like As long as I'm helping people, I'm right where I need to be and I'm right where I want to be.
I love that you said that because, being in the mortgage and real estate business, it's very fast. It's a fast business. And I love that you said that you just want to help people. It's the biggest purchase in so many cases of their life. And so to be able to finance it in a way that is going to not only keep money in their pocket, but make it comfortable for them month to month is so important.
Mhm.
And when you have, I've dealt with mortgage agents in the past that you can tell they're in it for themselves to get the quick client and move on. And then you never hear from them again.
Well, it's interesting that you say that because just what I have seen, not a lot of, a little bit about, there's a lot of people in the industry that want the fast, easy deals
Yes.
and they just want that quick turnaround. That's not how my brain works. I'm looking for the more difficult deals and I'm looking for ways that I can help people. So if somebody comes to me with a difficult file or a difficult situation, I'm like, that's the one for me. And I don't care how long it takes. I know in the end, I'm going to be able to help people. And it doesn't bother me how long it takes. I'm not looking for a quick fix. I'm looking for long term. I'm looking for relationship building and, people coming back to me every time it's time for renewal. I want them to come back to me. And if they feel like I was just sort of in it for the money or a quick deal, they're not going to come back to me. So it's
Yeah.
important to build relationships. And I love it. Like some people still like call me and text me just to check in and say hello. And that's what I
That's
love.
awesome. That's fantastic. It's about building relationships in this business, right? Whatever part of
Absolutely.
the real estate business we're in, because it is repeatable. It may not be immediately within like a year or two, but it is repeatable business, which is really, really nice if you really take care of your clients. That's the important thing. And the referrals that come out of it are also really amazing. You mentioned that the most difficult kind of scenarios is what you really thrive on. Is that kind of what you enjoy most about when you're helping clients in the mortgage process, or is there something specific that you really, really enjoy?
Well, I just like problem solving. I like it when people come to me and say, nobody's been able to help me with this. And I'm like, okay, I'm your girl. I'm doing this. I'm a very critical thinker and I like to be able to figure things out on my own. And I don't, like I said before, I don't care how long it takes. Right. So I don't mind those difficult deals. I don't mind like easy deals either, but I just really like to have the opportunity to actually use my brain. I've got two daughters and for the longest time when they were little, I'll be honest, I didn't use my brain as much as I could have or should have. So now that my kids are older, and that's what I mean when I say I want something for me, I want to be able to use my brain and I want to be able to, be a critical thinker and solve problems and come up with solutions. So, yeah,
That's amazing. It sounds like being a critical thinker and coming up with solutions and being in the depths of something and really kind of figuring it out is your neutral speed. It's what you enjoy doing. So that's really great. And I can tell you there's probably a lot of people that could use your help right now
it's tough out there
out
right
in the
now.
world.
And
It is
that's what
really
I say
tough.
to people
Yeah.
all the time. Like, it's just tough out there. It's sad to see. People are going through very, very difficult times. So, whatever I can do to ease that burden, I'm
Yeah.
going to do it. And if that just means like increasing their monthly cash flow, if I can find a way to do that, I
Yes.
can play around with amortizations, and that typically helps with cash flow. So there's lots of solutions. There's lots of things that we can do, even if it's just a couple $100s a month. That's a couple $100s a month. That means a lot to some
Yeah.
people. So yeah, it's
Yeah.
tough right now.
And we're going to get into that. We're going to get into, what is amortization? And start looking at some of these definitions so that, because it can get confusing. There's so
Mhm.
many like big words that are in our industry that, people coming in that have never dealt with it can get them confused and that could cost them money. So excellent. What surprised you most when you first started in this industry? Is there something that you were like, okay, this is different?
So I really, for the longest time, I was sort of under the impression that the world is very cutthroat and it's like people are just like in it for themselves. And I was very wrong about that assumption. When I found the brokerage that I'm with right now, first of all, it took me a long time to find that brokerage that was the right brokerage for me. And I'm so glad I did because I'm realizing now being in the industry, it's not that way at all. There's so much support Everybody just wants to help each other grow. There's very little negativity. There may be some competition, but I believe it's healthy competition. I don't think anybody that I've come across wants to sabotage anybody. Of course, we all want to grow and have our own growth, but it seems more like everybody wants to grow together. And even with a little bit of competition, we're all going to grow out of that. So I would say that that is the most surprising thing, is that just even just referral partners, other agents and brokers within my own brokerage, my executive team at my brokerage, just everybody is so supportive and everybody just wants to see the best for everybody. And that includes realtors, that includes lawyers, that includes financial advisors, everybody that we work with. We all just want to succeed together. So it's actually quite nice.
That's really nice. I felt the same way when I joined my brokerage because you hear a lot about the real estate agent kind of world. But my brokerage is just so supportive and patient and really focused on how we treat our clients. That's paramount in our brokerage. And so I feel the same way. I think that's fantastic to be able to come into an environment that you thought was a little bit more competitive. It is competitive, don't get me wrong, but a little bit more cutthroat. That word is very old school. I mean, I remember that word years and years ago when I was in sales. But yeah, I think that's fantastic that you found a place that you can build your business and thrive. What would you say when someone asks you if they're actually ready to buy a home?
I would say, let's sit down and have a coffee. Let's chat about it. Let's see where you're at. I would say that if you've been in a stable job for at least a couple years, I would say that if you have the income that would support that. Obviously, when people are paying high rent, they can also afford mortgage payments. We know that because the rent is really high. If you can make it paying rent, you can make mortgage payments. And I find a lot of people think that that's a very reassuring thing to hear. So yeah, as long as they've been in their job for at least a couple years and they have the income to support it, if they have enough savings or if they have the ability to have that down payment that they need, and as long as their credit is good. It doesn't have to be perfect, and I think that a lot of people don't realize that. There are options for everybody. Even if you've made mistakes in the past, or even if, life has thrown things at you that you were not expecting, a mortgage agent or broker can still help you. The bank may not be able to help you if your credit's not perfect, but mortgage brokers and agents will be able to help you.
I love that you said that. What is the difference? Why is it that a mortgage agent or broker can help where a bank may not be able to?
We have access to a lot more lenders. So the banks only have access to their own products through their own bank. So agents and brokers, we have essentially a broker network that we can go to. And that includes not only banks, but it includes credit unions, what we call mono lenders. They are lenders, and that's all they do is mortgage lending. So we just have access to hundreds of different lenders. But that being said, we have to also form relationships with all these lenders too. So that also helps when we, as mortgage agents and brokers, make connections with the lenders and their BDMs, business development managers. We form personal relationships and we're able to pick up the phone and say, hey, you know what? I got this really great couple and this happened, but this, and this. Can you take a look at this? And oftentimes they'll say, yeah, if you're sending them my way, absolutely, we'll take a look at this file. So that's the difference. We have personal relationships with these lenders. And there are so many of them.
And there seems to be, in some cases, a misconception that a mortgage agent charges the client. How does that work? So you work on behalf of your client, but who pays you?
So in most scenarios, we are actually paid by the lender. We're working for the clients, but at the same time, we're also bringing in business for the lender. So we are actually paid by the lender, and we get a little cut of like a percentage, similar to realtors. We get a percentage. It can change between lenders. Some pay more, some pay less. But at the end of the day, we're going to go with the lender and the product that works best for that client. So even if the pay for us is a little bit less, we will still take that mortgage all day long as that works best for our clients. There are some situations where we actually do have to charge, it's a brokerage fee. So that happens when we have to go to what we call alternative lending or the B side. So these are lenders that take on more risky files. So that could be situations where people have unfortunately had to claim bankruptcy. Maybe they've had issues in the past with credit. It could be that their income is just not quite where typical lenders would want their income to be. So on the alternative side, we do sometimes have to charge a brokerage fee because we actually don't get paid by those lenders. So sometimes when we do have to charge a fee, a brokerage fee, that would be part of your closing costs. But again, it's not the biggest part of your closing costs. So the thing is, if that's what gets you your mortgage, that's what gets you your mortgage. And a lot of these cases where there is a brokerage fee, people are more than willing to pay that fee in order to get the mortgage or the house that they want. So it's really not a huge fee at the end of the day.
Fantastic. But that only happens with alternative or B lending, right? A B lending product.
Exactly.
Right.
Exactly. Most
Right.
mortgages that we are paid by the lender and not the client. Sometimes in there's situations with self-employment as well, if the individuals need to state their own income. There's just different mortgages and products for everybody, and some of them we have to charge a fee for, most of them we don't.
Yeah. You said something earlier, and I'm just curious about it. You mentioned going to an alternative lending product or a B lender where someone's gone bankrupt or someone has not maybe had the most favorable credit background. You can still buy a house with that?
Yeah. With alternative lending, absolutely. Lenders want your business. So what's going to happen? Like, let's be honest, at the end of the day, everybody wants more business, right? So there's a mortgage for everybody. That's all I will say. There will be a way to get you a mortgage if you really, really want a mortgage. In some cases, we may have to say, listen, I don't think this is a good idea. And in situations like that, it might be a very high rate, and we might have to tell our clients, listen, this maybe let's just hold on for a second and wait a couple of years, because if the rate is just too high, we can't recommend every product and every mortgage. We have to do what's in the best interest of our clients. So yes, there are mortgages for everybody, but that does come at a cost, right? So the
At a
interest could be
cost. Yeah.
higher.
Yeah.
There could be yearly fees with that mortgage. So you really have to decide what's best for you and what is really actually feasible for you to do.
Right, right. Wow. That's so interesting. Like, I think that's going to
Mhm.
be really relieving for people to hear that even though they've had like, and poor credit history doesn't only come from not taking care of your credit history. It could come from a separation. It could come from unforeseen expenses due to injury
Mhm.
or sickness. So, I mean, I think it's such a great thing to hear that even though you may have gone through some tough times and you're on the road to improving your credit history, that you still have opportunity
Mhm.
to buy your home or buy a house. That's amazing. That's fantastic.
Yeah, it is great.
How about someone who's single or someone who's carrying a lot of debt? How does that work when someone comes to you and says, "Well, it's just me"?
That's great. That's no problem at all. As long as you fit within the lender's ratios, it's okay. As long as we can make the numbers work. If you're single, you can still buy a house. In fact, I would recommend it. I was single and bought my first house. Mind you, back then the housing costs were a lot lower. But honestly, if you're able to get in the market, get in the market. You don't have to have a partner to own a home. Like, you could even
That's
have
awesome.
roommates if you wanted to, right? Like, as long as you can get your foot in the door and get into the market, don't wait for other people to come into your life. You can do it on your own.
And
Absolutely.
the debt ratio analysis that they do, is it different with every lender? Like, does everyone have a different threshold or does everybody sing from the same songbook when it comes to if you make this much, you can only have this much?
So typically with the banks, they have their ratio and they're not flexible on that at all. It's this or nothing. But because we have access to a large amount of lenders, there are lenders with different products and programs where they can change the ratios a little bit. It's their company, right? So they can do what they want with it, and they can make up their numbers and they can tweak the ratios in order to make it work. Yeah, we do with we call them A lenders, banks, or credit unions. They are typically not flexible, but there are lenders who are flexible on the ratios.
And if someone's carrying debt, let's say they have their down payment, but they also have just as much debt. How does that work? How does that factor in with mortgage?
So there's some things that you can actually do. You could actually ask for like a different number on your mortgage to pay out those debts. In fact, some lenders will require you to do that just to make the numbers work and make more sense. So it could be an opportunity for you to clear a bit of that debt, and not even with first-time home buyers, but with refinances, you can also do that to clear the debt. What I say to my clients, the most important thing is let's get you paying the least amount of interest as possible. So with credit cards and like any lending products, the rates tend to be significantly higher than they are with mortgage rates. So it's fine if you have some debt. It's probably not fine if you've got like hundreds of thousands of dollars in debt. That would look a little bit not good to the lender, but it's okay if you have some debt. If you've got car payments, that's okay. As long as you fit within those ratios, we can make it work.
That's
Absolutely.
amazing. And so I've heard different things about credit scores and what you realistically need, but how important is a good credit score and what does good look like? Like, is there a from here to here, you're fine?
Mhm.
From here to here, you should probably work on it a little bit.
So I would
What are
say
your
that we
thoughts?
like to see 680. That's like the number we really like to see, but we can also work with like a 650 on the A side, on the prime side. The reason why we like to see like 680 or above, because it's for the client. It's because you're going to have the lesser rate. So the lower your credit score is, the higher your interest rate is always going to be. So that's the trade-off, right? So that's why we like to see 680 or above. It just makes it easier to get that file approved, and it just means that the clients are going to have access to the better rates.
That's really great information. I heard, and I'd love your thoughts on this. I heard that having a credit rating between 680 and 900 is really doesn't make a difference. Doesn't
No, it
get you a better
doesn't.
rate,
They
doesn't
just
get
want
you
680 or above.
perfect.
You don't
That's
get a
great to
reward.
know.
I
It's
mean, there
so
are
great to
rewards in
know.
life, absolutely, but you don't get like a gold star if you're at a 700 and whatever, right?
And you get a
I
gold
might say,
star.
wow, that's incredible. Good job. But you can't get a discount for that.
My goodness. It's such a relieving thing to hear because I don't think a lot of people know that. Or maybe it's just me. I didn't know that. That whether you have a 680 or a 900, you're still going to get the same thing. You're
Exactly.
not going to get anything back. So you're not going to get anything extra for being extra good with your
No, they're not going to
credit.
give you a best credit bonus or
Yeah.
anything like that.
But
Those are
I
like
think
the
it's
type A people,
relieving.
right? Yeah.
Yeah, no, right. But I think it's relieving for people to hear that it's like, okay, my credit isn't like a happy place is typically, the 725, 750. That's what I always aimed for myself.
Hmm.
But, having gone through what I went through with the variable mortgages and, money was tight. I mean, my credit rating did go down and it freaked me out, And so
Hmm.
as soon as we had sold the house and everything, kind of leveled off again, it was back up to, close to 800. But to know that it didn't really matter, it's like, how silly is
It
that?
didn't.
So, yeah, it didn't matter at
It
all.
didn't, but people are
That's
afraid of
wild.
that, and you know what? I want people to know, like, don't be afraid at all. We see it
Yeah.
all in this industry, and don't be embarrassed, don't be afraid. We understand that life happens, and a lot of things that happen to us are really through no
Yes.
fault of our own. Life just happens, and sometimes it just happens and happens and happens. Like, they say bad things come in
Yes.
threes, right? And I truly believe that. So the whole
Yeah.
point that we want you to know is don't be afraid to come to us for help. Don't be
Yes.
embarrassed. We've seen it all. And also, like you had just mentioned, it didn't take long for your credit score to pop back up. It doesn't
Not
take
at all.
long at all.
No.
As long as you're on the right track and you're making all your payments consistently, it doesn't take long to boost it back up. So even if you
True.
buy a new home and you get a mortgage term, you could take out a 2-year term, right? And then in those 2 years, work on improving your credit. Your mortgage payments are going to improve your credit immediately. So
Yeah.
after those 2 years, take a look at things again and then do a switch or sign back with the same lender, and your rate is more than likely going to be less than what you were paying before.
Amazing. That's great. How much money does someone really need to get into a home, get into having their own house?
So there are lenders that will go to 95% LTV, and that's loan to value, which means 5%. You can buy a home with 5% down, but you also need to take into consideration the closing costs. And I think that some people don't realize that the closing costs have to come out of your pocket essentially as well. So a lot of times the closing costs would also be a portion of what people have saved to purchase their own home. So suppose you have 10%, use 5% for your down payment, and then like closing costs can be anywhere from like 2% up to maybe 5, but like we don't really see it that high of a number very often. Maybe 2.5% of the purchase price would be the closing cost. So you can work it out to put like X amount of money for your down payment and then save the other little bit for your closing costs and then keep a little bit of money because you never know what could happen. And for
Yeah.
moving as well, you might want to keep a little bit of money for moving expenses because it is very expensive to move if you're hiring
Yeah,
people.
there's quite a
Very
yeah,
expensive.
there's quite a few, closing costs there. Even with the land transfer tax, if you're moving into the Toronto area
Mhm.
specifically, there's, like, almost double the land transfer tax.
Yeah.
So keeping that in mind that, closing costs can get really, really expensive, and it is an out of pocket
Mhm.
at the end of the transaction with your lawyer, so yeah, so
Mhm.
no so
So,
someone doesn't necessarily need 20%.
no, but since we were talking about closing costs, if you're putting under 20% down on your house, you will have to have default insurance, mortgage default insurance. And that's not insurance for the buyer, that's insurance for the lender. And it's just to protect them because it's higher risk for them because you don't have as much equity. So you will have to pay mortgage insurance, and part of your closing costs would be the tax on those premiums.
Yeah, it can get pricey upwards
Mhm.
of I've seen upwards of, like, 25,000.
Mhm.
So you're either saving that or you're giving it as an insurance premium, so
Yeah, it's all
yeah, it's
kind
a
of like it
trade-off.
all balances itself out, right? So people see these lower rates online or whatever, but it's not, it's kind of misleading because yes, when you put less down and you have to pay mortgage default insurance, your rates are going to automatically be lower because it's less risky for the lender. If you have more than 20% down, you don't need the default insurance and your rate's going to be a little bit higher. So it balances
Right.
each other out. You can get the lower
Yeah,
rate when you have mortgage insurance, and then your rate will be a little bit higher if you don't. So either way, you're paying.
perfect. Interesting. I could talk about scenarios all day long on this. So where can somebody's down payment come from? Because down payments can come from a variety of different places. It could be coming from savings, it could be coming from mom and dad, it could be a gift, it could be someone having you borrow it from their self-directed RSPs. When you look for a down payment for certain lenders, what is ideal, but then what is possible?
So ideally, you would have those savings and you would have saved the money on your own in whichever way. Some people use TFSAs. A lot of people use their own RRSPs. If you're a first-time home buyer, you can pull from your RRSPs in the first-time home buyers plan. A lot of down payments are gifted. And then the only thing is you just can't like borrow any credit products for your down payment. So you can't take out a line of credit for like $20,000 and be like, yay, I have a down payment. You can't do that. There are actual lenders out there who do have down payment assistance programs, though. So I can think of a few lenders right now who will help with the down payment, but there's a lot of logistics involved in it. So it wouldn't be ideal, but it could work for somebody who really, really has that perfect house and they just don't want to miss out on it. So yeah, it could be a gifted down payment, could be from your own savings. It just can't be a borrowed credit product where you're getting your down payment from.
You said something interesting. I'm just going to dig a little. You said that there are lenders that will help with the down payment.
Mhm.
What does the interest look like on that? Like if someone is really looking to get back into a home, maybe they just went through a separation or and they have family and they, just prefer not to rent. They want to
Mhm.
bring their kids into a home and they just don't have quite enough for a down payment. What does that look like? What could that look like for
I
someone?
haven't done one myself, but what I have seen is that that lender will also put a mortgage on your house for that loan. And then as the equity in the home goes up and you could owe a little bit more, like you have to pay for that. So it's really kind of complicated. So I don't even understand the logistics of it myself, but I know that it's possible. And I know if somebody came to me and said, listen, is there any way I can just like borrow the down payment? I would say yes, absolutely. But then I would at that point be going and doing my homework and reaching out to those lenders and getting them to explain it so I could go back to the client and say, yes, this is how this is going to work. So
Yeah, it's almost
it's
like
a
you'd be
little bit more
paying 2
complicated.
mortgages. Yeah, it just feels
Yeah,
like, and the interest rate
essentially.
might be a lot higher as well, right?
Yeah. So it would be registered as a mortgage on your property. That I do know, but it would be like a smaller amount, obviously, the amount of that down payment.
So sticking with affordability and being able to pay for a house and mortgage, how do lenders decide what your client can afford? What does that look like?
So essentially, what they'll do is they'll take your monthly income and they'll just take from that monthly income, they'll come up with a number based on the ratios that they're looking for and say, yes, this is your max monthly mortgage payment. And there is a formula that they use to come up with that number, but it has to fall within their ratios. And also, it has to be at the qualifying rate. So we still have to do a stress test. So that's like you have to add 2% onto what the actual interest would be. So you actually have to qualify at that rate. So 2% more than the posted rate. That's a little bit confusing too, but that's how they come up with the number for affordability, for max affordability.
I'm going to ask what the audience might ask here because I thought they took the stress test out. Is that
No, we're
just
still using it.
uh, okay,
Yeah.
interesting.
Yeah, we're
And is
still
that
using
for
the
all
qualifying rate.
lenders? That's for all lenders.
From what I've seen, yeah, we always have to put that 2% on for the qualifying rate. They may not call it the
Wow.
stress test anymore, but we do have to we do have to use a qualifying rate.
Yeah, interesting. How does debt kind of play into that? How does debt impact that qualifying ratio?
Because the more debt you have, the more it's going to put your numbers up. So we want your ratios to come down within the acceptable margins. So the more debt you have, the higher it's going to go. The higher your number is going to go. So that's that's why I said earlier it's okay if you have some debt and some monthly payments as long as it fits within the ratios, but sometimes there's just too much debt there. There's just too many monthly payments. You wouldn't be qualifying for probably enough for like a house
Right.
at that point. If you have too much debt, it would be very difficult to qualify. And like let's face it, the housing costs are, they're a lot right now for first-time home buyers. And there's not a lot that you can find for like under $500,000
Yeah.
unless you want to go like really far north.
I remember being a first-time home buyer many years ago and you know that hey, that's a mortgage payment, like why am I renting? I think
Mhm.
there's other costs that come into it that, we want those first-time home buyers to think about.
Mhm.
When you buy a house, that house is now yours to upkeep, maintain.
Mhm.
If it's a bigger property, you're potentially having to buy equipment to take care of it. You have
Mhm.
property tax, you have insurances, a variety of them that you need. So there's so many more pieces to the puzzle than just a mortgage amount. And
Right.
so keeping that in mind as we have people coming out of renting into buying a house, it's
Mhm.
so important to have that breakdown and helping them understand all of the different expenses that come along.
Right.
Because I think to a certain extent, and am I safe in saying this, that the lenders look at that? The lenders look at their debt ratio and say, can they handle this mortgage? But then everything else that comes into play when you buy a house, because it's not just about
Mhm.
the mortgage amount. Or are they just looking at the
Mhm.
mortgage and, hey, you're fending for yourself for everything else?
No. No. Actually, the property taxes are huge, and a lot of people don't think about that. But property taxes can get very expensive. So we actually use property taxes as part in our ratios to see the affordability. We have to use property taxes because people often they don't think about property taxes, but like depending on where you live, they can be really, really high. So we actually do. If it's a home purchase, we'll take the MLS number and we'll put that in and it'll bring up all the property taxes. So we actually put those property taxes in when we try to qualify you. So there's no surprises. So that is part of your
Amazing.
qualifying is that we add in those property taxes. Some mortgage payments will pay out for you. Sorry, some lenders will pay the property taxes out for you and they'll just include that in your monthly payment, while other lenders won't do that. So you would be responsible for paying your own property taxes, but it is a huge expense. There are also, like you mentioned, a lot more expenses when it comes to home ownership. So, like, stuff happens all the time. General maintenance is important. You have to maintain your house. Something that's really important that a lot of people don't actually realize is if you're not maintaining your property and taking care of it, if you're not making necessary repairs, you actually could be in default of your mortgage. If you read, you have to read the fine print when you're signing a mortgage. It's very important. But it does, a lot of them do say if you're not maintaining your home and if it falls into a state of disrepair, you could be in default of your mortgage. So it is your
Wow.
responsibility. Mhm.
I didn't know that. That's interesting.
Well, now you know. Now you know.
I
You have to,
know.
if you don't pay your property taxes and your house is not being maintained properly, you could be in default of your mortgage. Those are the terms of the
So
mortgage that a lot of people don't
interesting.
realize.
Absolutely. Absolutely. And going back to what else is factored into your qualification is the maintenance fees from mortgages, townhouse, non-freeholds, things like
Absolutely.
that. Yeah. Yeah.
We have to use that
That's
too
really
in qualifying. If you're buying a townhouse or a condo, we have to find out the condo fees and we have to include that in your affordability. So we will put that in too.
yeah.
So some people think, okay, well, I'm a first time home buyer. I'm going to buy a condo just to get into the market or a townhouse to get into the market. That way I won't have to worry about replacing the roof, worry about replacing the windows, worrying about if anything goes wrong on the exterior. But that's not actually true because you're still paying for it, but you're paying through condo fees. So
Yes.
again, it's all relative. You're still going to be paying for it no matter what at the end of the
Yeah.
day. So the difference
It's so
is like
true. And
time. Yeah. Really, the big benefit of condos and townhouses is just time. If you don't have time to maintain a property and look after it, then a condo or townhouse is probably more for you. But if you're thinking of doing that to save money, it's not really going to save you that much money at the end of the day.
no, no, I think, just to kind of play on that a little bit, condos and townhouses, you are at the mercy of what is going on outside of your condo. I mean, my mom had a flood in her condo because when they built the condo, there was like a nut that was not, I don't know the technicalities of it, but wasn't tightened enough or whatever it may be. There was construction happening above her and her entire place flooded. And it's a condo
No.
building. And then they went as far as to say that, uh-oh, we need to replace all of those in everyone. And so now that's a special assessment, result of a special assessment. And now they have to pay even more maintenance. And so you are really at the mercy of the condo corporation when you're going
Yeah,
to buy a
especially if it's a
condo.
new build because you don't know.
You don't know what could go wrong. And if something goes wrong, you're on the hook for it. And that's in your contract.
Mhm.
You are on the hook for it.
Absolutely.
That's what a special assessment is all about. So make sure if you're buying a condo that you're having your realtor pull all of that information and make sure that everything is in good standing, that the people that are selling have paid their portions up to date, especially if there has
Mhm.
been a special assessment. Like there are so many hidden costs that unfortunately first-time home buyers sometimes don't have the information that they should.
Yep,
They get a
and
little checklist
agents.
that's very generic out in the world, and they don't really sit with someone to kind of say, okay, let's take a look at this particular property specifically, and
No, it's
then
true.
really working with a mortgage agent to work out what the monthly payments could be beyond the mortgage as well.
Right. Yeah. So mortgage agents also have to pull the status report on the condo as well. So there are lenders
Yeah.
who also will find if there's issues with the the condo corporation or any issues at all, and they may actually say, no, sorry, we can't lend because this happened like 2 years ago. So, yes, condos and townhouses will save you a lot of time and they are convenient because you won't have as much work. But as we said, you will be paying for it either way.
So true. So true. So now we're going to talk a little bit about pre-approval, pre-qualification, what this all means. Like, is it even worth someone coming and getting pre-approved before they go and look at houses, or do you recommend they just get pre-qualified? And what's the difference between the two?
So, a pre approval, we are actually going to the lender and we are getting a pre approval with a rate. And a lot of them we could do a rate hold or lock in. Essentially, when we do a pre approval, it's very similar to an application, but it's just not 100% set in stone, right? So, we will put in for a pre approval and then they will come back to us with a number and say, yes, we can do X amount of dollars. This is what you're pre approved for. And then at that point, they'll say, okay, well, this is the rate. We'll hold it for 90 days. So that is a pre approval. And then we would go back to that lender when an offer has been made and it's firm. And then we would get the financing from that point. But it's important to know that just because you get a pre approval, it doesn't mean that you will get approved for financing because we're not underwriting pre-approvals as much as we would be full applications. So sometimes things do come up when we put in for a full application, and there are things that could disqualify you from that full finance. So if you get a pre-approval, like don't go buy a brand new car because if you do that, you may not get the financing that you were asking for.
Yeah, don't go buy your furniture at Leon's and put it on like,
No, don't do that. No.
pay over 5 years because you're excited about, landing this house.
Mhm.
It'll just, yeah, nothing is set in stone. Wait until you are closed and then do the
Exactly.
things that you want to do. That's really, really important. And so what is pre-qualifying then?
I think pre-qualifying is just people going online and using calculators and putting in their own income and that spitting back a number to them. Like that doesn't mean anything. We actually have to go to a lender for a pre-approval and get a pre-approval from a lender. So that's the difference. Pre-qualifying,
Yeah.
it just gives you an idea of how much you would be able to afford, but that doesn't take into consideration all the factors that agents and lenders are actually looking at. So credit rating, past history, payments, your job. Like, if you have only been in a job for like 3 months and you're new there, well, lenders don't really like that because they need to see the consistency, right? So on your end, you could think you pre-qualify for a certain amount of numbers just based on the numbers that you've put into whatever calculator that is. But it's not.
Always.
Basically, what I think is most important is that you know the difference between an online calculator that gives you a pre-qualification is not the same as a pre-approval. And that's important to know. So just because you put your own numbers in on a calculator online, it doesn't mean that that's how much you're going to get approved for. Because there are a lot of factors involved in an approval, and just doing an online calculator is not really sufficient enough. A full pre-approval would be best, and I think that you can agree with this. That's what realtors appreciate, that you've already gone ahead and gotten your pre-approval before you start to look at properties, because it does show that you're serious and you've thought this through. So if you are a first-time home buyer, it is really important that you do get that pre-approval so you know your numbers. You know what you're working with. You're not going to go look at like $1 million home when you essentially may only get approved for 750,000, right? You can't be going and looking at properties that are just not within your price range.
I love that you said that because I want to hit it home. It's so important to talk about this because a pre-approval, and you just said it beautifully, it's not 100%.
Mhm,
It is the first meaningful step forward
mhm,
in some financial capacity that someone has said, yes, if you go and buy a house, there's a really good possibility we can help you and we can cover you with a mortgage. The most important
mhm.
piece of this that I really want to hit home is that when you start working with a real estate agent, you may be just dabbling. You may be just looking at houses. Oh, I don't know. I'm not pre approved yet because I'm just curious what's out on the market. And then you fall in love with something. And now the conditional period becomes this like fast paced, approval process that can be highly, highly stressful. And so I want to ask the question, if someone gets pre-approved and then they don't find the house of their dreams, does it hurt their credit that they pinged their credit? And I say pinged your credit, but you pulled on your credit to be able to do this check. Is it a bad thing? Does it hurt their credit? Does it, impact some way, shape, or form? I'm just trying to understand why someone would be deterred by getting approved before they start looking at homes. Like, does it affect their credit?
No, not as much as people are afraid of. It's just an inquiry. It
Yes.
just shows that somebody's looked at your credit. That's all it does. What we don't want to see is many, many inquiries on your credit report. If I pull your credit and I see that you've gone to 10 different lenders, obviously something's not right, and obviously you're not getting approvals, because why are you doing that many inquiries, right? So if it's like one inquiry, it's okay, but don't keep rate shopping. This is a thing too. Like, some people think that it's okay to go to different lenders, but every time you do that, that is an inquiry on your credit report. If we pull your credit, it will show. So if you do it once, if you come to me for a pre-approval, the last thing I'll do on a pre-approval is pull your credit, by the way. That will be the last thing. So me as a mortgage agent, I am really relying on you telling me the full story and being honest. I'm going to be underwriting this. I'm going to be going through all of your documents. I'm going to be going through everything that the lender requires before I pull your credit. So suppose I've been missing one T4 slip for you for like 2 weeks. I'm not pulling your credit until I get everything that I need. So sometimes we can get lucky and like I pull your credit, you get a pre-approval, and that week you put an offer in, and then you put an offer in conditional on financing, and within that week, we get the approval from the bank. So that means I only pull once. If I give you a pre-approval in January and you don't make an offer on a property for another like 6 months, I have to pull your credit again because the lender needs to see what's most current, right? So it's important that when you're getting that pre-approval that you are ready to make that purchase, just so I don't have to keep pulling your credit, right? So it won't hurt you to do an inquiry, but it will hurt you if you're doing multiple. So you got to be really ready for sure. Yeah.
And so being very clear in the fact that it doesn't hurt your credit rating if you inquire and you've done your homework on, the mortgage agent that you're working with, or you've been referred to them or whatever it may be, and that they're going to be looking for the best possible pre-approved rate that they can. And so let's talk about rates a little bit. Fixed versus variable. What should buyers be thinking about right now in this market when it comes to variable and fixed?
So fixed rates, firstly, have nothing really to do with the Bank of Canada rates at all. And I think a lot of people don't realize that. Fixed rates are based on bond yields. So mortgage companies and mortgage lenders need investors. So when the Canada bond yields go up higher and higher, that means investors are having more return on their investment on those bond yields. So the bond yields are up here, and then the mortgage lenders are down here. So every time that goes up, then the mortgage lenders, they have to be competitive too because they need their investors. So that's why the rates keep going up as the bond yields go up, because mortgages are based on investors. Mortgages are profitable. People invest in your mortgages to have a return on their investment. So when bond yields are going up, mortgage companies and lenders, they also have to be competitive with their investors. So they have to put their rates up. So that's why this keeps happening. So that's what fixed rates really are in a nutshell. Variable rates are more dependent on the Bank of Canada rates. So that's why they tend to always be a little bit lower, but they're riskier, which we've already talked about. We know that they're riskier.
Been there.
But the thing is, we are not psychics. We can't really predict what's ever going to be happening. We think that there probably won't be any more rate cuts in 2026. They will likely hold, but there could be maybe one other increase, right? So, but it's not going to be a significant increase at this point. So the variable rates could go up within the next couple of years, but I don't think it's going to be as drastic as it was. Like, how long ago was that? Like 5 years ago or longer that they went really high? In any case, I
It
personally
wasn't
don't
that
think
long
that the
ago.
rates are going to go that high again,
It was
but
about
we don't know.
4
Look
or 5.
yeah, but like, look what's going on in the world. There's so many things that we don't have control over. And even economists can't always predict it, right? So I would say right now, because the fixed rates are a bit higher, a lot of people are doing variable rates, but they are a little bit riskier. So we're seeing like shorter term variables. So rather than like 5 years, people are going for like 2 or 3 years just to kind of test the waters and see how they do. But it really, at the end of the day, it's all your comfort level and it's all your what's affordable to you. If you are more comfortable with a fixed rate mortgage with a little bit of a higher rate because the payments are consistent and you know how much you're going to owe still at the end of the term and you know how much interest you're going to be paying, then if you want that security, yes. If you want to go into a variable because will increase your cash flow and your payments will be a little bit less, you just have to understand. And I would absolutely explain to you, if the mortgage rates, if the Bank of Canada rates go really high, you need to lock in a rate at this point. So when you do
Yeah.
get a variable mortgage, there are ways that you can lock those rates in. Unfortunately, it won't be as low as the rate that you would currently be paying. It will be a little bit higher because then you're going into a fixed rate at that point. But you're never actually stuck. You're never actually going to get in that situation where you get a surprise $10,000 bill, right? If your agent is explaining things to you properly, you'll know. And like for me, I would call you. If the Bank of Canada rates are starting to go up, I would call you and say, listen, I think you could probably get a good fixed rate right now. If I were you, I would lock in right now if things started to get really, the way they were 5 years ago. So it really just depends on what works for you at the end of the day.
Yeah, it's working with someone like you to sit and kind of take me through what my options are, what my trade-offs are, and what's the
Hmm.
best decision, and being very close to your mortgage agent so that
Hmm.
if something does shift in the market, you can call them and say, what should I do? Should I lock down? Is this the right time? Because
Hmm.
things are so volatile right now. And I think it's scaring a lot of people from buying a home. But when you look at the rates and where they are right now, they're so much better than they were 5 years ago, like you said. And I
Hmm.
think people were buying houses hand over fist 5 years ago because it was just like there's so much happening in the market that can impact the buying and selling side. Right now, we're in a market where so many people are selling because in a lot of cases they can't afford it anymore. They
Hmm.
came in at a time where their mortgage rates are much, much higher now, and they just did not budget for that. So I think it's a really good learning opportunity for anyone coming new into buying a home to really look at that. What's possible? If the interest rate goes up to here, what's that going to look like for me? And that's something that you can help them with, correct?
And that's another reason why we use the qualifying rate always, because if it does jump up as much as 2%, we know that you'll still be okay with making those payments. So this is actually what's happening right now, and it's really unfortunate to see. So this is like I think the 5 year mark when people were last signing on mortgages at like really low rates. So there's a lot of renewals coming up. We know in COVID that the people were buying houses like crazy, right? So all of those mortgages are coming up for renewal right now. Some of them did last year, but a lot of them are coming in this year too. And the rates
Yes.
are significantly higher than what they were paying. So if you're a first time home buyer and you bought your first house for $850, or sorry, $850,000, your payments now are going to be significantly higher than they were. So it is a shock to people when they see what their new mortgage payments are going to be. Like, it actually is really quite terrifying. So
Yes.
that's our job, is to get you the best possible product for you and just to
It's
find you.
scary. Yeah.
It is scary. Yeah.
And
So,
and not to even talk about, like, the equity that people have lost over the years. They bought so high during COVID, and they've lost, like you said, your story, like, they lost money, and they don't have the equity in the house that they thought they would. I remember
mhm.
houses at the corner of Riddell and Broadway, those townhouses that are still selling 5 years later.
Mhm. Yep.
The last few are selling. They were selling them at the height of COVID over 1 million. And I actually went there to take a look at potentially buying one maybe a couple of years ago, and they were down to like 720. The people that bought them for 1 million, if I can encourage the audience or people listening, is ask questions. Don't be afraid that someone's going to try and win your business or sell you on their services. Just ask the questions. Be honest with them that you're not ready to buy or sell or whatever, but you just need some answers. And the
Hmm.
ones that will slow down and answer your questions honestly and authentically, those are the people that you want to work with. And
Hmm.
so it's really important to not be afraid to ask questions and to be vulnerable in those moments, because we're talking about money here. Like, no one wants to talk about money, but it's a conversation that needs to be had with trusted people, and there are trusted people out there. There's two right here.
Yes, you can
There are
absolutely
trusted
trust
people out
us.
there.
Yeah,
Yeah,
but
for
you did
sure.
ask, like, will the rates do the rates actually affect whether you or not you should be buying right now? You should always be buying if you're able to buy. Don't worry about the
Yes.
rates that much because, like we
Yes.
just said, the rates are forever changing. Homeownership, hopefully, is a permanent thing. So nothing will ever look the same as it did 5 years ago, right? So don't be afraid to get into the market if you're able to. If you have the income to support it and all the boxes are checked off, if you can do it, do it. And as I said earlier, if you can afford rent, you can afford mortgage payments. It's all about
Yes.
being responsible with your money.
Yes.
And in saying that, I will say this is what I want people to know more than anything. Please don't buy new fancy cars. You don't need them. I remember in the 80s and the 90s, I don't know anybody who bought a car off the lot brand new. I don't recall that at all. People just had their vehicles and they just paid mechanics to repair them as they needed repairs. If you think that you want to enter the housing market, do not go out and buy a big fancy truck for like $90,000. That will be the most detrimental thing that you could possibly do to your finances. If you don't need it, don't buy it. Or sorry, if you don't need it, just don't buy it. Like, especially with
Mm,
vehicles. If you do have to buy a new vehicle, buy one that's like a little bit more modest where your payments are not going to be as high. Because keep
right.
in mind, if the mortgage interest rates are high, so are the car interest rates. You don't want to be paying interest on a vehicle that depreciates in value.
It's true.
You can pay interest on a house that will increase in value, hopefully, but it won't lose value. So that's my big takeaway is just try to avoid those car payments.
Those big payments.
Absolutely.
Yeah, that makes sense. That makes sense. So now we're
Yes.
gonna jump into offer and closing. So we talked a little bit about, the conditional period in putting an offer in, what actually happens. You finalize the approval with the lender, and then what happens as you get closer to closing? What's the backstage kind of behind the curtain happenings with the mortgage companies to get this person to a closing date?
So this is the part that we don't want you guys to see or worry about. This is when you don't hear from me as much or you hear from me a lot. So lenders have a lot of conditions that need to be fulfilled before closing. So I may be asking you for some pretty wild things in that period that you're like, why does she want this? It's not me, it's the lender. Once I've put in the application and you get approved and you get a commitment letter, I'm not done. I have to also do all the underwriting for the underwriter. So I'm going to have that lender is going to be asking me for a ton of stuff. I'm going to be working with the lender's underwriter to make sure we get all those conditions fulfilled. I'm going to be working with your real estate agent just to update them on how the financing is going. I'm going to be speaking with lawyers. So there's a lot that goes on between like your offer getting accepted and closing. Like you think you're done when you get like approved for your mortgage, but you're not done until it's signed off by the lawyer and it's funded, essentially. It's not over till it's over. There's a lot happening in the
Wow.
background. And honestly, like depending on the lender, it can be kind of stressful, but you'll never know that. I will never tell you if the underwriter's being difficult or the lawyers need this or that. I'm not going to tell you that kind of stuff unless I absolutely have to because you're already anxious and stressed out about your home purchase. So I'm going to take as much of that burden as I possibly can, and I'm not going to ask you for anything unless I absolutely have to, because it's the lender's underwriter who is asking me for all these extra things. So there's a lot that happens in the background, but
Right?
honestly,
You're
it's not
shielding
really
your
over. Like,
clients.
yeah, and a lot of it has to do with the lawyers too. So once I've met all the lender's conditions, then it goes to the lawyer's conditions. So when it goes to the lawyers, there's really not much I can do at that point because I've essentially finished the file on my part. But there is a lot that goes on in the background, but it's our hope that you don't actually know how stressful that
Awesome.
can be.
So only a little curtain pullback.
Yeah.
What are the biggest things that could go wrong between approval and closing? Have you seen anything that's like, this could have been avoided, or this is my, I'm going to stand on this platform right now and tell you, like, make sure you do this or don't do this so it doesn't happen to you?
hmm
What's the biggest thing that could go wrong?
So don't make any big purchases. Like you said about like the Leon's furniture, don't finance anything at all. Don't buy a new car, don't finance anything. Don't touch your credit for any reason. Just sit back and wait. There are things that happen that could be through no fault of the buyer at all, and it could actually just because of the property that you're buying. There could be issues like with the sellers of that property. We don't know. And it's the lawyers who actually are the ones that find all this stuff out. If there's issue with the property or the land or um, anything that's out of the ordinary, like maybe like the appraisal isn't where it should be. Like lots of things can happen. Like you could buy a house for X amount of dollars, and then when we order the appraisal, the appraiser could come back and say, no, it's actually worth less than this. So there's so many things that could happen. So many things that could happen. And if the appraisal comes back in a little bit lower, then the lender's going to say, well, we don't really want to lend you this amount of money because the appraisal said it's not worth that. So then you might have to kind of go over everything again. Just
Wow.
there's a lot of things that can happen. Even
Yeah. But
like
it's so worth it.
title searches. When the
Yes,
lawyers do title searches, things can come up all the time.
that's right. I just did an interview with a real estate lawyer, and it was so insightful to see things from their perspective. Like, I've bought and sold a number of homes, and like for myself, like personally, and to not have that detail, and so but it's not readily available.
Uh-uh.
And so it's really interesting to kind of sit down with people like you and really kind of give the insider scoop and sharing what's actually happening on your end, and so that there's visibility and there's transparency and understanding for this journey, because it is a big journey. It's a very financially heavy journey,
Mm,
but it's an exciting one. But it can easily turn stressful if you don't have the right people in your corners. Yeah.
absolutely. That is so
Yeah.
true.
So now we are in the Mythbusters portion. I think we answered a couple of these, but would still love to kind of take you through like a true and false. Do you need 20% down to buy a house?
No, you do not. And this is why we talked about mortgage default insurance. So if you have less than 20% down, it would just be an insured mortgage, is what we call it. So you can still buy a house. Absolutely. You just need to have mortgage insurance, default insurance on that
That's rolled
property.
up into
The
your
only time you
mortgage
actually
payments,
do,
right?
yeah, the only time you actually do need 20% down is if you're self employed. Yeah.
Right. Got it. Yeah, absolutely. I had a mortgage agent who specializes in self-employed individuals, and we went down rabbit holes. It was amazing. Lots of
So
great
many.
information
Yeah.
there. Yeah,
Yeah.
yeah. All right. You should wait for the rates to drop before buying.
No, you shouldn't. Don't worry about rates. People are far too fixated on rates. Everybody wants the lowest rate, the lowest rate. But you know what? The lowest rate is not necessarily going to be the best thing for you. If you find a home that is perfect for you and you are ready, just buy the home. The rates are going to forever be changing. Nothing ever stays the same. But then you don't want to be like in 10 years thinking about that property that you should have bought because you didn't like the rates. You don't want to think about things that way, right? Hindsight is 2020. Like you have to just get that property for sure. Don't worry about the rates.
You said something earlier that I want to circle back on really quickly around you want to have the best amount of cash flow for your client. And
Mhm.
it really is looking at a variety of different things. It is the
Mhm.
rate, but it's also the amortization.
Mhm.
Is there
Yeah.
anything else that can help the audience understand how you get them to an amount or a payment amount that in the long run puts more money back in their pockets?
Yeah. So as first time home buyers, you can go up to 30 years amortization. So sometimes it's in your best interest to amortize it a little bit longer. And to be honest, there are lenders out there who will go to 35 years. I believe a few even go to 40. I personally wouldn't recommend that just because you will be paying a lot more interest over time. The idea is to, pay for your house, right? But sometimes cash flow is more important. So we can play around with those amortizations to boost your cash flow, but I wouldn't go to the extreme. If you can avoid going to like 40 years, absolutely. Or you can amortize it over 25 years as long as the payments are comfortable for you. It's all with what's in your comfort level. And there are people out there who aren't as worried about cash flow as they are about paying down their mortgage and reducing the amount of interest paid. So it really, at the end of the day, it depends on the individual, it depends on the couples. What are your goals? And that's what we always want to know. What are your main goals? What is most important to you? If somebody says, I want to pay this house off as fast as I can, I'm going to come back with, okay, let's do 25 years, see how it goes for the first few years, and you'll be paying the less amount of interest that way. If somebody says to me, look, I really want to get in the market, I found a house that I love, I need to get in it, what can we do to get me qualified? Then I would say at that point, let's go up to 30-year amortization to get your payments down a little bit lower so that you're also more comfortable. Also, another thing to add too, as a first time home buyer, it's smarter to go to 30 years because you really haven't experienced the world of home ownership yet. Your property taxes, all the expenses that we talked about earlier, maintenance. How much does it cost to actually own a home? It can be very expensive to own a home. And like you could move into a house, buy your first house, and in 2 years you get a leak in the roof. Like there's always things that happen. So you want to be more careful with your cash flow in the beginning. And then as the years go by, then you can play around with the amortization if your goals are changing. So, but
That's really great.
don't ever stop yourself from buying just because you don't like the interest rates. Because really, at the end of the day, it's not going to make that much of a difference on a long term basis.
In the long yeah, in the long term. So people look at kind of just the next few years, like, what does that look like?
Hmm.
Because when you go and get a mortgage, you can either lock in for 2, 3, 4, 5 years. Does that impact the rate that they get?
It depends on how the lender does their compounding too. Some of them compound like quarterly, some of them like biannually. It just depends on the lender and what exactly they're doing. So the rates that you're actually paying though, the longer you lock in, typically the less rate you have, right? Because the lender wants you to lock in for 5 years. It's just more
Yes,
beneficial
they
to
do.
them. So you may get a bit of a break on the rate. If you're only wanting to lock in for like 1 year, your rate's going to be higher because it's just more work for everybody. You don't want to be renewing your mortgage every year anyways. It's just too much work. And it costs you money
Yes.
too. It's
Oh my
not free
goodness,
to renew
yes.
your
It's
mortgage.
not.
Yeah, so if you go up to 5 years, your rate will be a little bit lower. If you want to only take a 1 year, then your rate's going to be higher. It just depends on the
Yeah.
lender. They want to make their money too, right? They want to have their business.
All right. And the last question in my Mythbusters segment is getting pre-approved means you're guaranteed that amount.
No, nothing is ever set. It's not set in stone until you get that approval, that real full approval from the lender. And even then,
And that
things could
typically
change.
happens during the conditional period, right?
Yes. Yeah. The condition of the
Once you're
offer.
locked in.
Yes.
Yes, the
Right.
conditional period of the offer on the house that you work on with me.
Exactly. And
We
this is
get you.
actually
We
a
get you
good
that
point that you
conditional
make.
period.
This is another reason why I would strongly suggest working with a mortgage broker or agent as opposed to the bank, because we can work with your real estate agent hand in hand to make sure everything goes smoothly. It's less worry for you. So your bank's not going to work with your real estate agent. You're going to have to figure all that on your own. We don't want that. We want to make this process as easy for you as possible because we know that it's an exciting time, but it's also can be very, very stressful. So working with an agent is so much more beneficial to you for that reason, just because we can get to know your real estate agent and form a relationship too. So the more support you have, the better the outcome for you. Absolutely.
Yes. Yes. Yep. 100%. I think everyone's afraid of, oh, what does this cost? What does it cost to have somebody do this for me? What does it cost? I think the cost that they have to look at is, what is the cost if you don't? That's what people are missing. Well, I could just go to my bank and, I can just deal with it there. But there's so much more information and opportunity to have that one-on-one support when you're dealing with a mortgage agent. I'm a big advocate of mortgage agents. I've done it both ways. I'll never go back to dealing with a bank directly. For me, it's all about that one-on-one support and them walking things and having the patience to walk me through what is needed, what my paperwork is, why they need that paperwork. I mean, I think that's a lot of what people miss is that cost of not going
Hmm.
that direction to get that extra support.
And the human aspect of it too. Banks are transactional.
Yes.
Humans, we build relationships, right? And there's a big difference in that. And something that I say all the time in any instance in life, if it costs you your peace, it's too expensive, right? At the end of the day, we just want peace. We want things to be harmonious. We want things to work out. And, having somebody in your corner is the best thing you can do. So the bigger your support system, the better the outcome for you. And I think
Yeah,
that's the
absolutely.
most important thing when you're buying your first home or when you're getting a mortgage. You need people in your corner. You need people who are working for you, not for themselves. And honestly, like I would say, we talked earlier about like competition in the industry. My only competition is the bank because I don't want you to have to go to your bank. I want you to have the best experience possible. And that doesn't even necessarily mean coming to me specifically. You go to who you know and you do what is best for you. If you know an agent or broker really well and you think that they're going to do the best job possible for you, then go to them. But
Yes.
all of us together want the best possible outcome for everybody. And I don't believe that you will have the best income, the best outcome if you go to somebody who is transactional as opposed to
Yeah.
somebody who wants to build a relationship and genuinely wants to help you.
So true. So true. So much great information today. I love it. And now we've come to the part of my podcast that sometimes is my favorite, but I call it the encore. It's where I ask questions about music. My podcast is obviously Rock and Realty. And so I love to learn about people's musical interests. So, what's your go to playlist when you are heads down? Working on those mortgage approvals and getting people to the fin. What do you love to listen to, Shannon?
So this is funny to me because anybody who knows me really well, they know that I am stuck in the 90s. I'm obsessed with the 90s. So that is going to be my go-to playlist. I have a Spotify playlist of just my favorites. I think there's like 300 songs on it. Like it's crazy. Going back to when I was a teenager, I grew up very remotely on a lake with like no cable TV. All I had was music. So music to me is so important. Like for every song I hear, there's a memory or a connection attached to that song. I'm not talented. I'm not in a band like you, Teresa, but I love music and I have such a great appreciation for music. So for me, like my playlist is kind of all over the map. There's a lot of 70s, there's a lot of 80s, there's country in there, like all sorts of
Love
stuff.
it.
But I would say the main thing that I'm listening to is like these alternative rock, like Nirvana, Pearl Jam, Radiohead, Oasis. Like those are probably, oh, even Nine Inch Nails. Like those are big for me. I kind of like when I was in high school, I was like kind of like a grunge girl, we call them. Like just wearing plaid and corduroy pants, dressed like Eddie Vedder.
That's right,
So
with the
yeah,
wrapping it
yeah.
around your waist. Oh my god, I was in university
Absolutely,
at
yeah.
the time, so
Big fan of
I
the
remember
90s.
those
I need
days.
to maybe try to get out of the 90s a little bit at some point, but I can't see myself doing it. I always am on my laptop working. That's what I do. When I'm not talking to people and meeting with people, I'm on my laptop. A lot of what I do is
Me too.
based on the software that we use as agents. So a
So
lot of music
cool.
happening, definitely. Yeah.
That's amazing. What would you say was the best concert you ever went to? What was your favorite concert?
I didn't really go to a ton of concerts. I wasn't really allowed to. I got in a lot of trouble when I was a teenager, so a lot of times I was grounded. Also, I lived in a small town. I grew up north of Kingston, so we didn't really have too many opportunities to go to concerts or anything, but I think like the one concert that I really did love was I saw Tool, and it was amazing. Tool was
I
really
saw
good.
Tool.
Yeah.
That's so cool.
Yeah. It was in Toronto. I believe it was at Skydome, aka
Yeah.
Rogers Center.
Okay, I think we were at
Yeah,
the same
Tool was
concert.
great.
Yeah, I think we
Maybe
were at
it's
the same
possible. I feel like that was early 2000s. It was like early
Yes!
2000s when I
Yes!
was like a grown up living on my own and was allowed to go to concerts. I
That's
got my
right.
own concert tickets and I went and saw Tool, and it was phenomenal. I'm like, look what I've been missing for my whole life because I kept getting into trouble and I was always grounded.
That is so funny. That is so funny.
Hmm.
Well, I want to thank you so much, Shannon, for taking the time out to speak with me today. Just kind of really distilling it down to the basics of mortgages and helping the audience learn about them and understand them, and maybe demystifying some of the stresses or the things that could cause stress when going through this process. So thank you again. Really appreciate it. If you want to get a hold of Shannon, all of her information is going to be in the description. But what's the best way to get a hold of you, Shannon? Is it phone, email, website? What's the best way?
I'm really available on every platform. I respond to Instagram messages pretty quickly. Facebook, Instagram, you can reach out to me there. You can reach out to me on LinkedIn. My card, like once you get my business card, however you want to get a hold of me is totally fine. If you want to pick up the phone and call me, I appreciate phone calls. I'm big on texting too, like whatever's quick and easy and most efficient for everybody. But if you haven't connected with me in person in real life, I would say your best bet is to go on to Facebook or Instagram because all of my links are on there. There's a link to my website. There's actually a link to download an app. I have an app that's available, which is actually really cool and convenient. So that link is on both Facebook and Instagram. So it's a Mortgage Center Canada app, and it has a lot of tools and calculators that are on it, and it's really cool to use. But if you use those tools and calculators, they are not set in stone. Just keep that in mind. That is not a pre-approval. If you pre-qualify on my app, that does not mean you're getting a pre-approval. So yeah, so there's my website, has a ton of information. The MCC app, the Mortgage Center Canada app, is a really, really great tool. And I suggest that you download that app because it's like giving you more power, and it's, it just gives you a better idea of like what numbers could look like. But please do reach out to me once you have my information, because I just feel like it's so much more effective to have a conversation and just to get to know each other. The better I know you, the more I can help you. So I really believe in that human connection. I know that it's simple to, hide behind a computer or laptop, especially if you're an introvert or you're nervous or, for whatever reason, you don't feel comfortable calling or talking to people. It's hard, but like once you make that leap and you make that human connection, your outcomes are just going to be so much better off that way.
Fantastic. All right. We're going to have all of your information in the description below. Thanks again, Shannon. Have a great day and really appreciate your time. And hopefully maybe we'll have some comments and some additional questions. We'll have you back on the podcast.
Great. Thank you so much, Teresa. I really, really, really enjoyed chatting with you. It's been a great experience. So thank you for your time.
Yeah, thank you for yours. Thanks so much for tuning into this episode. Have any questions or want to recommend a future guest for a show? Leave a comment or send me a DM. And if you're ready to take the next step in your real estate journey, schedule a call using the link in the description. Make sure to follow my channel so you never miss an episode. And if you found this helpful, leave a comment. It helps others find us. Thanks so much. That's a wrap. See you next time.